Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
Welcome back to Money 101. Today, we're joined by Michael Saylor, who is eager to reveal his upcoming projection for Bitcoin and elucidate his optimistic stance for 2024. The imminent Bitcoin halving scheduled for April and the anticipated approval of a Bitcoin spot ETF by the U.S. Securities and Exchange Commission take center stage. Currently, the SEC is actively evaluating several applications for this ETF, and with BlackRock's substantial influence, there is a growing conviction that we are on the brink of witnessing the approval of at least one Bitcoin spot ETF. Such an approval would mark a historic milestone eagerly anticipated by the Bitcoin community for well over a decade. This green light for the ETF carries profound implications for the cryptocurrency realm, serving as a gateway to substantial institutional investments. It has the potential to attract interest from sovereign wealth funds, major corporations, and even governments. Saylor foresees that this development will open the doors for large corporations to integrate cryptocurrencies into their balance sheets. Let's delve into the latest interview with Michael Saylor and explore why Bitcoin is positioned to revolutionize the cryptocurrency landscape as we approach 2024. If you found this information valuable, please consider subscribing. Your support means a lot to us.
And that puts Bitcoin where a year from now?
Higher.
How much?
We could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point. The ETFs are unlevered and they charge a fee. MicroStrategy is an operating company, so we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with a convert, and then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that. We offer sort of a high performance vehicle for people that are Bitcoin long investors. Well, we will absolutely continue to acquire Bitcoin. And we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders. I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward. We're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents a digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. There's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions. You know, we welcome fair value accounting. It's gonna create much more transparency and clarity and P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. Loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think smart money is investing into that ahead of it.
Saylor challenges the conventional economic indicators, arguing that metrics such as labor statistics and inflation figures are often manipulated to craft specific narratives, rather than providing an accurate reflection of the true economic state. Within this framework, Bitcoin emerges as an alternative, untethered from the manipulations of traditional economic spheres. Saylor emphasizes that major corporations like Apple, Amazon, and Google are poised to swiftly amass significant amounts of Bitcoin through a spot ETF, leveraging their established relationships to bypass the cumbersome processes of acquiring the actual commodity. This discrepancy underscores the transformative influence of cryptocurrencies on traditional financial institutions. Michael Saylor underscores the imperative of embracing digital currencies as the economic landscape undergoes rapid changes. He encourages investors to harness Bitcoin's potential for securing a more prosperous financial future, especially in a world where borrowing money becomes costlier. In the midst of market noise, Bitcoin stands out as a disruptor in the financial realm, challenging traditional practices with big banks acting as the custodians of balance. Saylor acknowledges their efforts in maintaining stability, but anticipates an inevitable shift. Share your thoughts on the latest interview with Michael Saylor and how you envision his predictions for Bitcoin, crypto, and the financial market unfolding in the latter part of 2023. Drop your comments below. Thank you for watching. Remember to hit the like button and subscribe for more content like this. Stay tuned for the next video.